question is, companies boycott Facebook. Is it a buy or is it a sell? Welcome to my channel 2H Combo. In this video, we're gonna talk about Facebook. Companies boycott Facebook. Are we gonna buy or are we gonna sell? Or are we gonna stay sidelined? Let's take a look. I have a chart in front of me, so let's take a look. This is a chart of Facebook. You can see it right here. It says Facebook. It's a daily chart. Well, it's not. It's a weekly chart. I'm going to change it to a daily chart. And as you can see, historically, Facebook was what, like 190. This is not a good chart to look at further back. Let's take a look at monthly chart. Say okay. So let's see. So we're looking at the monthly. Okay, so this is better. Alright, so this is a monthly chart. So normally as a long-term investor, you don't really need technical analysis, but it does help to enter. It helps with your entry so you can get a better price. Otherwise, like I said, you can just buy regularly regardless of where the price is. So this is an edge, right? So what you do, you review charts. Normally you go from a higher time frame down to a daily chart. So here I just want to illustrate to you what happened in the past. So stock used to be as low as like $25. Of course that was in like year 2013. The stock went up. I think they had some kind of scandal. The stock came down to about 120 something, 125 maybe, because there was a support right here, right? So it came and then it bounced back up, and then we have coronavirus. It came down as low as like 138, right? And then it came back all the way up to what, like 240. And so now companies boycotting Facebook, and it came down to about 216. All right, so that's on a day. That is on a monthly chart. So let's look at a weekly chart. What do we see? So on a weekly chart, very similar. We see the scandal price here around 123 or so, and then it went as high as 240 after coronavirus crisis. That went down as low as 136. So right now, last Friday it closed at 216 something. Okay, so a lot of people panicking. They don't know what they're supposed to do, sell or what. Now I can tell you as a long-term investor, this is a good opportunity to buy. Okay, but where do we buy? We can buy right here, 216, but probably it's not ideal using technical analysis. So before I go on, we need to go down further and look at a daily chart. Okay, so this is a daily chart. So for those who have no idea what you're looking at, let me go through a little bit, give you some basic lessons, or telling you what I have on here. So this is a candlestick chart. When you see a green bar, that means it goes up on that day. And you see a red bar, it means it went down on that day. Okay, there's more to the bars than just red and green, but that has to be done in another video. So moving on, I want to tell you what these are. Okay, these broken lines, the first one is a 20 day moving average, and it's an exponential. Same thing, this one is an exponential moving average of 40. And then you see I have a blue, a green, an orange, and a red. Okay, those are also moving average, what they call a simple moving average. All it is, they take the numbers. So let's say this is the first one, the 20-day moving average. So what they do, they count 20 days prior, add them up, take an average, and then they plot a point on the chart, and this is what you got. So they do the same thing with the 40-day moving average. Instead of 20, it's a total of 40 prices, add them up and take an average. And they do the same with the 50, with the 100, 150, and 200. Of course, these are all done by computer. And so this is what you've got. So in investing, we don't really use this a lot, but we use it to our advantage, especially when there is a drop in the market. So in this case, we're looking at Facebook, see how far it drops. So it has dropped to the 50-day moving average. Normally, the further it drops, the better it is. So we're looking at around 200, 198. That's where 150 and 200-day moving average almost align. So that's where we want to see. So we're not predicting at all which way it's going to go or how far it's going to go. However, we have an option to wait. My preference is we can wait until it gets to 200-day moving average, about 200. That's when we can buy some. Okay, I also talk about buying a little bit at a time and average in. So in this case, at 200 we can buy some. And then going back to a weekly chart. So now on a weekly chart, it's a little bit different, right? So for a long-term investing, we look at all chart, but commonly I go with the weekly chart. It's a little bit easier to read, and also it gives me a clearer picture. So now when we look at the lines, the moving average, we see that right now it's not even touched the 20-day moving average, right? So I would wait, see if it comes down to 170. So as I said, maybe buy some at 200. If it comes down to 180, buy a little bit more, and then if it comes down to 170, buy some more. Of course, there is a possibility it may comes down to as low as 120, 125. Then we can even buy even more, right? So buy a little bit at a time. If it comes down to 200, 180, 170, 150, and finally somewhere around 125 or so. So that's my take on it. I'm not predicting which way it goes, but as a a long-term investor, Facebook is a solid company. We just have to average in and hold it for a long time. Also, past performance does not predict the future. However, as you can see, when we had the scandal, the stock went down as low as 123 or so, and then it was able to rise back up to 240. So this time, if it's gonna come down as low as 123, we're gonna buy more, and we'll hopefully wait as long as we can, and hopefully it will rise back to 240 or even higher after many years. That's all I want to share with you, my thoughts on Facebook. Definitely, it's up to you what you want to do. That's just my opinion. You need to do your own research, do your own studies. So thank you for watching. I hope it is educational. Please like, subscribe, share all the good stuff. Until next time, happy investing. Bye bye.